Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Wednesday, January 14, 2009. We begin in the Asian Pacific, where New Zealand building approvals increased 4.3% in November following a 19.7% drop in October. On an unadjusted basis, however, approvals were lower. In Australia, meanwhile, the number of home loans increased by 1.3% for the November period, a better than expected result. Both economies are facing tough times as credit remains hard to get and the global recession eats into growth in the commodities-led export sector. Japan's machinery tool orders were down 17.9% on the year in December, preliminary data showed. This indicator is used as a leading indicator of future capital spending. The data shows that lower capital expenditure will continue to weigh down the nation's ailing economy in early 2009. Weak capital spending has been a key reason behind Japan's GDP's successive contractions in the second and third quarters last year. Carry trade pairs saw whippy action in today's session. The Aussie yen found support yesterday near 58.60 in late afternoon trading, climbed 240 pips to test 61.15, and then fell back down overnight and during today's New York session. Stocks were up in Japan, but the main European indexes were down 4.5% on concerns over the banking sector, igniting another bout of risk aversion. U.S. markets also opened in the red, extending the pair's decline. Eurozone industrial production fell by 1.6% in November, putting the annual rate at negative 7.7%, the sharpest drop on records that go back 18 years. The news showed a 2.8% drop in production of intermediate goods and a 1.8% drop in capital goods. With demand from the global economy faltering, the news adds extra pressure on the ECB to lower rates by 50 basis points in their meeting tomorrow. The euro-dollar pair dipped in European trading after reaching 1.3330 during the Asian session. It then felt the pressure of the Eurozone production data and news that the German economy slowed sharply in 2008, heralding a deeper economic downturn this year. The euro fell all the way to 1.3090, a change of 200 pips and a new low for the week. In the U.S., retail sales took a steep plunge in December, falling 2.7%, and the figures for November and October were revised lower as well. Excluding autos, sales were down an even steeper 3.1%. American consumers are being plagued by several factors, including debt, eroding asset prices, tougher access to credit, and fears of being laid off, which are all manifesting themselves into lower consumer spending. However, a large part of the month's decline was a reduction of sales at gasoline stations as prices came down considerably during the month. U.S. import prices fell 4.2% in December and are now 9.3% lower on the year. That's the first annual decrease in the index since 2001 and was the largest overall decrease since the series started in 1982. A large portion of that decline was led by falling petroleum prices, which also showed up in the trade data yesterday. U.S. business inventories fell for a third straight month in November as companies cut back on stockpiles in a response to weaker demand. Usually, lower inventories mean that companies will buy more goods to restock their shelves, thereby stimulating economic growth. However, in these conditions, businesses are choosing to keep inventories as lean as possible. The news from the U.S. and the losses overnight in European markets pressured U.S. equities, with the Dow Jones Index falling 250 points in early morning trading. The dollar-yen pair retreated from its intraday high near the 90 level, falling around 130 pips. A new level of short-term support is setting up for this week, with price action forming a downward channel. Oil prices retreated below $36 a barrel, though there was a late recovery. However, the damage to the loonie, which fares poorly during times of risk aversion and falling commodity prices, was already done. The US dollar-Canadian dollar pair continued this week's ascent, surging about 350 pips following a dip to the 1.21 area overnight. The pair broke through its medium-term resistance around 1.2360 and now runs up against resistance from early December. Tonight, important fundamental releases include core machinery orders and the corporate goods price index from Japan, and employment and business confidence data from Australia. Overnight, we get consumer price index data from Germany and the Eurozone. Tomorrow, the ECB will decide on interest rates with expectations of a 50 basis point cut. From the US, we will get weekly jobless claims, producer prices, the Empire Manufacturing Index, and the Philly Fed Index. And that wraps up this edition of our broadcast. Thank you for joining us here at cmsfx.com, and happy trading.